This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news of a day of mostly restrained gains in economic metrics. First, in the US, mortgage applications rose nearly 7% last week from the prior week, driven by a sharpish 27 basis point retreat in mortgage interest rates. Despite the gain, they're still 11% lower than the same week a year ago, itself quite weak. American consumer debt rose only a very modest $8.9 billion in May from June, less than the $10 billion expected and the $11 billion gain in the prior month. These levels are up just 1.8% in a year. Clearly, Americans are not being profligate in taking out new consumer debt. And the latest US Treasury bond auction was again well supported, this one for their 10-year. It delivered bidders a median yield of 3.89%, sharply lower than the 4.22% at the prior equivalent event a month ago. Across the Pacific, China released its July trade data late yesterday. Their exports were up less than expected, a 3-month growth low. An export-led recovery doesn't seem to be happening there. Their imports rose more than expected, though, with their strongest rise since April. That meant their trade surplus shrank in July. And the Chinese dairy industry is going through a tough time at present, with a number of listed companies in the sector delivering operating losses and warning of tepid demand. And China's foreign currency reserves rose to $3.26 trillion, an 8-year high, even if the monthly gain was relatively minor. But it is still somewhat short of their all-time high of almost $4 trillion reached in May 2014. In Europe, German industrial production rose 1.4% in June from May, better than expected on strong new order growth and making back about half the prior month's retreat. However, both metrics remain deeply negative on a year-on-year basis. And Australia released its 5 living cost indexes for the second quarter yesterday, supplemental to their CPI. For pensioners and beneficiaries, they're up 4.1% for the year. For aged pensioners, up 3.7%. For self-funded retirees, up 3.6%. For other benefit recipients, up 4.6%. For employees, living costs were up 6.4%. The overall CPI was up 3.8% in the same period. The US Treasury 10-year yield is now just on 3.97% and up another 9 basis points from yesterday. And the price of gold was started today virtually unchanged from yesterday at $2,392 an ounce. And oil prices are up $1.50 at just on $74.50 a barrel in the US, while the international Brent price is now just over $78 a barrel. And the Kiwi dollar starts today up almost a half a cent from this time yesterday at just on 60.1 US cents. Against the Aussie, we're up almost 3/4 of a cent at 91.8 Australian cents. Against the euro, we're up 40 basis points at 54.9 euro cents. That all means our trade weighted index starts today at 68.9 and up 70 basis points. And the Bitcoin price starts today at $55,912 and down 1.4% from where we left it yesterday. Volatility over the past 24 hours has been moderate at plus or minus 2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.